we need to talk about the supply squeeze affecting the private market and how I feel the market is sort of underestimating the impact of this supply squeeze. It's because of this, right? We need to talk about the supply squeeze affecting the private market and how I feel the market is sort of underestimating the impact of this supply squeeze. Why, right? The fact is that, right, private supply as of now, today, is already very low. For those of you who do follow us, you remember a couple of Facebook Lives back, the number of people staying in private properties, number of households staying in private properties, the number stands at about 290,000, being 21% of 1.39 million residence households. But if you take the 70th decile thereabouts, right, or if you just take the average household income of people staying in 5-room HDBs and executive HDBs, right, their budget is, let me pull out that number. Their budget can go up to $2 million. So the average household income, combined household income of people staying in HDB 5 rooms and executive flats is $13,000 per month. And if they take a max loan, right, their affordability can go up to $2 million. And based on that income, 13,000, right, it falls under close to between the 6th to 7th decile, giving us a number of about 500,000 households, 500,000 households, of which only 291,000 is currently in private. So that's sort of understanding the demand aspects to it. So if you feel that supply is already very low, do understand that it's actually the fact is that it's low and it's going to be getting even lower, right? Now, the demand is going to come up because remember what we said with HDB, BTO, MOPs going to average 17,500 and pushing above 20,000 after 2030. So demand is continuously strong and the potential for demand is strong as well. Private supply over the last couple of years, later on I'll share a couple of slides, have remained low. So now, on the supply side, right, I've broken it down into 5 categories, okay? So private supply can come from resale, either new or resale, right? But I broke them into even greater subcategories, right? First, how do properties come up as a supply into the market, right? Is number one, when people want to upgrade from their condo for their own stay purposes, right? Most of the time, either for location or for size, okay? The second kind of supply comes in from the resale market of people wanting to exit, wanting to soap up their investments, right? Maybe get a slightly bigger investments. For example, someone like ourselves, when we saw our first investment property in Jurong and swapped it out into a larger investment property over in Park Esta. Okay, so that is one more kind of supply that is being fed into the market. Third are people that just looking to exit their real estate investment to cash out or to sort of consolidate their assets, which is something that we do see quite a bit. For example, a couple that owns 2 properties now want to liquidate both, consolidate their funds to buy a big landed property, or people that are doing away with like right sizes, got one landed and got one condo, maybe just want to sell both to right size to a HDB, or sell both, find a smaller property, don't want to worry so much about the logistics of owning a property. So exiting real estate investments is also forming one part of the market. And then the third and the fifth, the fourth and the fifth one is what we all know lah, right? The new supply comes either in terms of en bloc or GLS. So now, let me explain. I highlighted point 2, point 3, point 4, right? And these are the points that these are the supply sides, right, that are affected, that will see some impact because of the cooling measures. Okay, let me elaborate on that a little bit more. And also, before I jump into that, let me explain also a little bit on why I do foresee that fog, right? Meaning private prices going up and HDB prices going down, why we will revert back to that sort of phenomenon that we saw in 2013 to 2018, 2019, okay? It's because, think about it, on the HDB side. So if we look at the supply of HDB side, right? On the supply of HDB side, right, most of the time you can only break it down into two, right? Resale HDB or HDB BTO. Okay? On the private supply, they both are market-driven kind of, in terms of how the prices over here are determined, right? Resale, market-driven. New, be it en bloc or GLS, also market-driven because they have to do a tender. But on the HDB side, the HDB supply, yes, resale is market-driven, but the HDB BTO is government decided and is subsidized, which is why it's not a fair fight. If the two supply comes up, right, most of the demand will then flow over to the subsidized one, the HDB BTO one. Then the resale will suffer a lot. Hence why once the supply is a lot for BTOs, right, resale will get impacted a lot. Another way we can look at it, if you look at the private ones, right, if new one comes up, most of the time the new ones that the government sell is more expensive than the resale one. So more new one come up, actually the resale one benefit. Sort of the opposite way and whatnot, right? But simply put it, private supply prices always continue to look up. HDB supply extremely competitive, right? And especially with government subsidized BTOs impact price movements, right? Now let me share with you some of the charts okay? So the first chart, right, and why I feel this undersupply squeeze in the private market is sort of, it kind of scares me a little bit because demand is coming up, then private supply it's continuously and constantly going lower. Hello, sorry to interrupt. We'd like to take the opportunity to thank you for watching the video, and also to share why we do what we do, is to empower consumers with hard facts and figures, quality research, and real-life examples to allow them to make the most informed property decisions. So if you found our videos useful, the only thing we ask for is for you to smash that like and subscribe button so that the YouTube algorithm can push out our videos to more consumers. Thank you, and back to the video. And why in this round of cooling measures, it is going to bring it down even more, okay? So first chart is, of course, developer unsold inventory. This will be the new supply, okay? So now, why did I highlight in the previous one that new en bloc supply will be impacted by this round of cooling measures? So en bloc, if you see the numbers, and that is on the last chart, last table, okay? You probably can't see the years, okay? Now I zoom in and you can see, oops. Okay, I zoom in. As you can see, the numbers are already very low from 2019 onwards. Let's try to draw. From 2019 onwards. So by right, if you see the trends, over here, they do have usually a gap of 2 years, 2 to 3 years that the numbers are quite low. Okay, so by right, 2021 we should have seen an uptick in terms of en bloc. That was just about going to start, and then the government instituted the December 2021 cooling measures. Why this number dropped from here to here was because of the 2018 cooling measures, where developer ABSD came up from 15% to 30%, right? Then December last year from 30% to 35%. So the developers are feeling the pinch of all these cooling measures much more than us. So now that is already causing some hesitation of the developers to go into the en bloc market. So that is developer demand. Now on the supply side, that has also been stripped off, especially in terms of OCR en blocs. Let me explain why. Because PropNex does have an en bloc team, having spoken to a couple of them, and you know, as well as because they have been doing surveys over some of the potential en blocs, right? The kind of feedback that they gave is that some of the owners are saying, wow, yes lah, my property I go en bloc, yes I do get $2 million maybe, right? On average, OCR en blocs maybe $2 to $2.5 million. Sounds like a lot of money, but now if I cannot buy a HDB because of this round of cooling measures, right? Because if I cannot buy back a HDB or right size to a HDB, I have to go and buy a condo, for example. That's going to set me back like 1.5, 1.8 million. Then end up I cash out like 700,000. Not to say that it's not a lot of money, but a lot of them then, again, because of the temporary, then just decide to go like, you know what, then maybe let's just see how it goes. Because I approve the en bloc now, I support the en bloc now, en bloc finish, later I come out. Number one, if I have to go and rent, go into the bananas rental market. Number two, have to buy private at a very high price. Again, is it really worth the hassle? A lot of these people retired already, don't want to go through all that hassle. So developer demand for en bloc already low. Now suddenly, those that originally want to go en bloc, now because of this temporary cooling measure, then they also don't want to go for en bloc anymore, which is why I say new en bloc supply is coming down, has been pushed down because of these cooling measures, even more than what is already which is also already low lah. Okay. Developer unsold inventory already on the downward trend. So we are seeing it drop below the levels of which we have last seen right before the trigger of this supply upwards. And I've explained before why the government is trying to hold back this private supply so much. It's because they want to focus their manpower over to the BTO side to try their best to lower that wait time. Because if they cannot manage to lower that wait time, we're going to see, right, December to September, 9 months. I think in 6 more months, if the price don't come down, we're going to see one more round of cooling measures again. And what are some of the potential cooling measures that can come in place? Not the topic that we want to talk about, but I've talked about it before in our video on cooling measures. Like, you can check out that video if you want to. Right? So, do I expect this to pick up anytime in the near future? The answer is no. Right, because I know what the government's priority is, all right, and why they are holding back the developers so much. Okay, and so this is the GLS numbers. Again, I feel a lot of the times how they publish news about GLS, right? They always say, what, 25% increase on GLS numbers quarter on quarter as compared to the last quarter. Sounds like a lot, but actually if you zoom out, this GLS numbers looks like nothing compared to what it used to be, right? So that number is also very low. So what isn't shown inside this these charts, right? It's let me jump back to it. The resale investment and resale exit supply, right? Those we don't really have a chart to it. But just let me share an example with you, a case study with you. Maybe it can help you understand this better. Why I feel the people that are currently holding on to properties from an investment perspective probably don't want to swap it out too much in this market. Number one, for those of them they are holding it for investment, they may hold it back. Number one is because rental is so good, right? Rental good plus interest rate high, a lot of them will then decide to hold on to their current investment properties, because swapping it out enters them into a lot of uncertainty and whatnot. Another thing is, if they have locked in their loans at very low interest rates, right, and very low deals, right. Just now, just having lunch with some colleagues, some of their clients managed to lock in at 1.something%. Some managed to lock in at sub 1%. So if there's any one of you here right now, right, let us know, will you sell your property or not, right? Because you sell already, you buy back into the market, you then suddenly go from 0.something to 3.something. It throws your whole investment analysis, investment numbers out of whack. So because of that, a lot of people are choosing to continue to just hold on to their existing investment properties. People selling out of their investments. Another case study, another example. So imagine this, right? You bought your private property 10 years back, right? Most likely 50% paid down already, or 40% paid down, or pretty good chance fully paid, right? Now, rental is up 20%, right? The figures that were shown in the Rental Market Bananas article. Rentals across the board up 20%, so most of them up more than 20%. So this increase in interest rate actually don't really affect you. For most of them, that increase in rental actually more than covers the increase in interest rates, because of their very low LTV, having already paid down a good chunk of their properties. Now, even though prices have come up, would you sell? Knowing also on top of that, today if I sell and I want to buy back, so why the investment one also, my point two, why that is also affected. So only those that will swap out their investments are those that don't have to pay ABSD. If those that need to pay ABSD, there's no way that they will swap out their investment already. They will just keep a hold of it. So now this whole ABSD thing actually is also pushing down, because people looking to exit sell their properties, right? They cannot get it replaced. Right, rental is so good, fully paid. Right, basically no stress at all. Right, it's super hard to go and tell them to sell and do other things, or sell and swap out their properties, because of that 17% ABSD that they have to pay. Right, so ABSD basically is the main thing that's holding back point 2 and point 3, sucking that supply out of the market. I hope it's not too chim, but basically, the supply coming out into the private market right now is new launch supply, GLS, Lentor Hills, Lentor Modern, and those needs-based supply. Right, so what I see is that the private market is super duper undersupplied. And before we move on to the topic proper, why I chose this topic to talk about is also because of this. Right, in which area is this supply squeeze most prominent? Right,